Welcome back. Here with us on Editors Roundtable, and this week we are in conversation, as you can see, with Mahesh Nadurkar of Jefferies. And Mahesh has given us more reason to cheer. He says after 5 long, painful months, perhaps the worst of this correction is indeed over. So now let's get to the second level of it. And you know the question that's coming in, Mahesh, right? What to buy, how to build that long-term portfolio. Do you still like, I think real estate as a space you were quite constructive on. Tell us about the top themes right now.
Yeah, so the best risk-reward sector at this point in time, I think, is lenders, basically banks and the lending NBFCs. Sure. I think that looks like the best sort of sector from a risk-reward perspective. An ideal combination of valuations, which is actually one standard deviation below the averages. You know, the only sector in India where the current valuations are one standard deviation below. So that gives a lot of comfort. And, as I mentioned, the fact that the RBI seems to be very constructive on improving the liquidity, which I think is a great news for the banking sector and for NBFCs as well. Because one of the biggest problems that the sector has faced over the last 1 year or so is weaker deposit growth, the pressure on LDRs, therefore forced reduction in the credit growth and so on. So I think now that part clearly seems to be behind. Did this, and
I have to ask you this, not getting into individual stocks, but did this derivative issue with one large lender, did that bother you? Because now there are reports, and even, our sister concern Money Control was reporting that it could force the regulator to open up other books and just generally do a hygiene check across the board on how derivatives are being accounted for. Your thoughts?
Yeah. That's a possibility, but I, essentially think that it's not really something that is, a very broad-based issue. And
it's not a systemic issue.
It's not a systemic issue in my view. So I don't think it really impacts the whole sector, as such. That's what, our view is. And, by and large, as I said, the deposit growth begins to improve and the credit growth begins to improve as well, I think automatically the concerns on the asset quality and all that, I think, will begin to come off, in my view. So I think that looks like the best sector to own from a risk-reward perspective. Some of the other very interesting
on the flip side, a sector that you would like to avoid, and maybe you've downgraded as well, is IT. That's largely because of valuations and global concerns, or only because of global concerns?
No, both. See, the thing is, if you look at the valuations in the IT sector, they have been like on the other side of banks, which is like one standard deviation higher than the averages, and one was willing or one was happy to pay that kind of a price because the growth outlook was fantastic, the dollar was strong, and so on and so forth. But once that factor and that tailwind goes away, the currency tailwind goes away, the growth outlook in the US becomes, weaker, then I'm unwilling to pay a 25% premium to the average numbers, right? When we know that the broader market is at an average, there are 100 plus stocks which are trading at below average and so on, then, then why would I pay a 20% premium? I know that the IT sector has already corrected, but even after that correction, we see that it is still about 15-18% higher. And I don't really see any reason. I mean, you can always find some interesting stock ideas which could do much better than the rest of the sector. But at an overall sectoral level, I would still say this type of valuation I'm unwilling to pay, even after seeing the correction that we have seen.
Right, and one more point, Mahesh, the globe is in a bit of a flux, so to call it, right? And that's why that could be probably one of the reasons why tech you're not too bullish on. But on metals and mining, actually, the call has worked quite well because the markets have seen a pullback. But I think a couple of stocks this year that have relatively outperformed have been stocks like Hindalco, Tata Steel as well. There is that hope there's going to be some safeguard duty. And a couple of notes you'll have mentioned, right? The return ratios going by history as well. Risk reward appears favorable. So tell us that call out there, because if the global demand is going to slow down itself, then it could be on this pack. For now, it's not really showing up.
Yeah, so global demand, especially as I mentioned, like US economic growth seems to be on that, on not that great a footing. But where we're seeing an improvement is, is China. We are seeing improvement in Europe. And even in the US, I mean, if you go by what Mr. Trump has been saying, he wants to focus on infrastructure. So that gives you a confidence that maybe metals probably will have a lesser negative impact. But the bigger tailwind is coming from, as I said, like Europe and US, Europe and China. I mean, the Chinese property markets have also started to kind of, bottom out. There's some initial signs, of that. And if you'll ask me, what is the one single biggest factor for steel demand globally, then is the Chinese housing, ultimately. So that's one. So the portfolios that are India dedicated, and if you want to play the China recovery story, then this becomes an option for you.
Correct.
Apart from the other factors that you mentioned. And also there are other factors like the possibility of the safeguard duty, etc. And if that were to come
That will be the sweetener.
That will be the sweetener. And that can actually cause like massive, almost 20-25% EPS upgrades and EBITDA upgrades.
Yes.
What else? Other sectors that you're quite convinced on at this point?
Travel, I think, right? Travel is something that you're like hotels.
Yeah, so we
as well
like
as...
discretionary consumption, which includes travel. In fact, we like autos as well.
Yeah.
Okay. We continue to like real estate. So real estate, I think, is a great long-term story. We had turned cautious on it, around the election time. But after the budget, we actually turned more constructive, once again.
By the way, today there was a large deal. Blackstone has put in a majority stake in a listed.
Right.
So, again, that shows that there is a
lot of interest,
an appetite from private equity investors to put that into Indian real estate.
So select autos,
actually,
hotels.
if you'll ask me, if you'll ask me to talk about like real estate, I would say that this is one sector where the stocks have corrected massively in the last 3-4 months or so. But there have been hardly any fundamental negative news. So if you look at the corporate results, very strong pre-sales numbers, good
and strong balance sheets. Most of them are sitting on good balance sheets because they've raised cash last year.
And rather interestingly, now we've started to see some of the real estate promoters of some of the large companies, they have started buying, the stock. So that also gives a confidence that yes, things are fundamentally, quite strong there.
Quite interesting. So who knows? Maybe autos, real estate, and financials could be leaders of the new bull market as and when it starts. Any final quick thoughts? Last 10-15 seconds left.
I would say that I would also, add one more sector, power. That, is also, I think, due for a pullback, on the higher side. Because that's one sector where the power demand was weak in the first half, but there are reasons. And now we're already seeing, a smart recovery there.
So generation, transmission, or distribution, which part of it would you play? Power.
I would rather play it like more directly, which is like generation.
Okay.
And I think also some equipment plays as well.
Okay.
Yeah.
I guess we're not out of questions, but out of time, and the long weekend awaits you as well. So Mahesh, we'll wrap it up. Thank you very much. This was a pleasure, and I hope you managed to find the time to drop in a little more frequently to our offices. Excellent conversation. Thank you so much.
Thank you very much for having me here. It was a pleasure.
And festive greetings. Have a fantastic Holi weekend.
Happy Holi to all of you guys as well.
Thank you. Thank you. Well, with that, guys, I think it's time for us as well.
Yeah.
Get the colors going. All right. Well, it's a wrap on this edition of Editors Roundtable. Many thanks for watching. Have a great Holi weekend. See you with the markets again next week.